It's Brian Preston, the Money Guy.
All right, let's talk about this is one that bothers me and breaks my heart because I want you to understand the IRS and organized crime have more in common. And look, please, IRS officials, give me some latitude here. I'll explain because I don't want to get in trouble.
I have a wonderful client that works for the IRS. Like, oh man, I hope she didn't just hear you say that.
Because it is one of those things where I just want to be real here, though, is that there's a lot of movie kind of themes, or if you think about the concept of what the whole premise of the movie is, where there's a struggle. That you have a character who has to come up with a certain sum of money by deadline.
Right.
And so they come up with all these strategies, schemes, and other things to raise money and so forth. So the whole premise of the movie is they're running around trying to raise this money, but it never fears that they get to the end of the. They
finally do it.
They
get
raise
the
money, and they have to go pay this shadowy character the money they owe, and they show up, and the person's like, "Yeah, that was the amount of money you owed back here. We've actually been running some juice, some vig on this."
I just want to make sure. Is that your mobster voice?
Yeah,
and by the way,
you earlier thought in pre-show when I gave you an example, you thought it was Ric Flair.
Yeah, I did. I thought it was Nature Boy.
Woo! No, it's not. It's not Ric Flair. That is my mob voice. Because here's effectively what happens. You show up and they want to run some juice on you, and the government, the IRS, does the exact same thing. Because there's a lot of you guys. One of my biggest pet peeves when I do tax returns, because I 20 years of preparation experience. Underpayment penalties.
Yep.
Oh my goodness, they break my heart.
So it's not bad enough that we have to pay the taxes in general. It's not bad enough that maybe we didn't withhold enough throughout the year to cover it. But then if we don't pay it at the right time, we get punished for it.
Yeah, the government says, "Nuh-uh, we run juice. You better pay. You got to pay not only what you owe us, but since you didn't pay it back here, you go give us some juice and some interest on that, and we're going to charge you a penalty on it." So this thing, I'm telling you guys, this one breaks my heart when I'm doing taxes because it also, once again, sneaks up usually on the self-employed or business owners who have some type of income structure coming in, and they just don't account for it. So I want to help you kind of figure out so you don't have this situation fall on you.
What are some things we can do, or how do we avoid even having an underpayment penalty?
Well, the first thing, there's two ways that you pay your taxes. There's withholding, and when we're talking about withholding, we're talking about your wages, we're talking about pensions and retirement distributions, and even Social Security.
That just happens automatically when it comes out.
You can set it up. I mean, that's why whenever you think about any new job, you do a W-4. And by the way, they're updating that. We did a great Ask the Money Guy segment on that if y'all want to go check it out. But that's why one of the first things that your employer gives you is a W-4 because they want to know how much to withhold from your paychecks. So that's one way you're paying taxes. By the way, one little caveat. Withholding, it doesn't matter if you withheld your taxes in December versus January. The government gives you credit that it happened throughout the year. So that's a favored way. So if you're one of these people, we get to the end and we figure out you're just in a bad situation and you have control on your payroll, you can ask your payroll administrator if they will run a special payroll on you to withhold substantially more money on your December or November paychecks, so that you can take advantage of not getting a penalty for maybe some income that came in January, February. Great planning technique, but withholding is kind of tax favored in that way. So that's the first. Estimated taxes. This is if you receive income and you're not an employer. This is like, interest, dividends, alimony, capital gains, prizes, and awards. They're basically give you probably a 1099 miscellaneous, a 1099 div, 1099 interest. These are 1099B. I mean, I feel like shrimp scampi. Barbecue shrimp. I mean, I feel like I'm throwing out all kind of things there, but it really is. 1099s is how you're going to get paid on this stuff, and there's no taxes. It's going to be up to you to pay the taxes. They just give you the gross
amount, the whole big amount.
They're giving you the gross amount. It's up to you to pay your taxes on time. Self-employed, same thing. You start rolling monies coming in from your customers, and then all of a sudden, you're expected to be responsible for paying the taxes, and the win is April 15th, June 15th, September 15th, January 15th.
So I want to make sure I'm hearing this right. So what I'm responsible for is when I receive income, in the period in which I receive that, I have to make an estimated tax payment in that quarter to cover that income. It's not like, oh, well, yeah, I had all this income come in, but I can just wait till April 15th and write a big check. And so long as I do it before April 15th, I'm clear.
No, and here's the other. I feel like the IRS tried to confuse us a little bit because here's the other part. This is a tax preparer confession here. when I think about first quarter is January 1st through March 31st. So our first payment is due April 15th. That makes sense. Common sense.
Yep.
And I like to say tax policy is usually common sense. Second quarter, April 1st, June 30th.
Okay.
That's second quarter, right?
Right.
When does that second tax payment due? June 15th.
Not July 15th.
Wait a minute. That doesn't make sense. That's right at the end. That's the last month of the second quarter. When is the third quarter estimated tax payment due? September 15th. Wait a minute. Third quarter ends September 30th. Guys, makes no sense. And then if you think, okay, well, maybe they're just always running in the last month of the quarter, I'll just remember that. The next estimated tax payment is due January 15th of the following year. So they gave you, once again, more latitude. I'm telling you guys, it makes absolutely no sense. And these dates also change. You have to take into account weekends because maybe it's April 18th one year because the 15th fell on the weekend. Very confusing. But this is the thing. You have to pay attention to the timing. If your income came in January, February, and you didn't pay the tax, you figured out, I better send the government a big check in December. That's when I'm telling you they're going to play the whole mob boss thing on you, and you're going to have an underpayment penalty on your tax return. Okay,
so surely, Brian, it can't be that bad. There has to be a get out of jail. There has to be something to keep me protected throughout the course of the year, right?
Well, let's talk about it. First, there's a strategy. If you do find out you're looking back on last year's tax return and you got stuck, and you know, well, wait a minute, this is not fair that I have this underpayment penalty. The first thing you need to ask your CPA is, can you annualize my income? Because maybe if the IRS understood when I got the income, because maybe you had a big payment come in November or December, so it's appropriate that your estimated tax payment was in that fourth quarter, or that fourth payment. That is, if you annualize your income, it's going to help you get out of jail on that. That helps you. But let's talk about the actual planning for everybody else. Here's the thing. Most people, if you're less than $150,000 a year of income, as long as, and I pulled this straight off the IRS's website, so let me read this. Quote, you paid withholding an estimated tax of at least 90% of the tax for the current year, or 100% of the tax shown on the return for the prior year.
So if I make under $150,000, if I pay at least 90% of what I owe this year, or 100% of what I owed last year, I'm covered.
You won't have an underpayment penalty.
Okay.
But a lot of you are like, wait a minute, I make more than $150,000, and maybe I'm in a sales position, so my income's all over the place, or I'm a business owner, so my income fluctuates. I don't know how much I owe. So here's what: if you make greater than $150,000 of adjusted gross income, then you need to pay 110% of last year's taxes. That's just that's your safe harbor amount. If you'll pay 110% of last year, it protects you from making sure you don't have these underpayment penalties.
Where I see this happen most often would be in a couple where one spouse is kind of the primary earner, and let's say that person makes $150,000 a year. But the second spouse does some sort of side hustle, picks up a side gig, and they're kind of self-employed, but they're actually pretty good at it. And their income is the thing that bumps them over the 150, but they're kind of new to this business ownership, and so they haven't been paying estimated quarterly payments. That's where I see this happen the most. So if that sounds like you, make sure you have an understanding of what 110% of last year's tax bill looks like.
And the big thing, if you're self-employed or you started a small business, just because I know a lot of business owners will say, well, I'm going to keep 20, 25% just on the side. Everything I make, I'm going to put, just having that money in a bank account waiting to pay in April is not going to protect you guys. Pay attention to when you earn the money and when you pay the taxes, because the government is paying attention, and I want to keep you out of trouble on that. Bo, we just covered a lot with taxes.
Yeah, it's amazing that this thing that's so certain, taxes, is so complicated, right? It is a complicated system. But just like most things in personal finance, if you're willing to put in a little bit of extra work, a little bit of extra effort, be a little more organized, implement some of these strategies, like looking at your capital gains at the end of the year, like thinking about how you're giving to charity, like taking advantage of your employer-sponsored retirement plans, like making sure that when the government tells you have to take money, you do, and when the government tells you have to pay money, you do. If you can do those things, you're going to simplify your life. You're going to save yourself money on taxes.
So I'm thinking, when you deal with something complex, the first thing, what makes mankind so incredible, is we have developed tools. We have figured out, not only was fire enough to start cooking meat and what we ate with. We needed, hammers, screws. Matter of fact, I just had to do a simple machine project with my youngest. And so a screw counts as a simple machine. So I've learned all kind of things doing this project. If you could, YouTube, thank you for YouTube, because it made my job so much easier. We also wanted to give the Money Guy family some tools and resources. So you got to go check out our resource page. This thing is still quasi new. So please go take advantage of that. If you go to moneyguy.com, just click on our resource page. You're going to be able to download all kind of things. I've already told you, I've got a prototype that I use for this show. I'm
really excited about that.
This is the 2020 Money Guy tax guide that we're going to be sharing. It's not there now, so hold your horses, but you got to go to the resource page because this is where it's going to show up. If you want to get this prototype, get this actually for yourself in 2020, you're going to want to go download on the resource page. Also, new thing. This has to be you, Bo, because I'm too old for this. We have now a Money Guy Show at Money Guy Show Instagram page. Go check that out.
If you want to see pictures of us, we've actually got some stories up. You want to see kind of us hanging around the office, maybe get some behind the scenes of us recording, or just get some interesting financial tidbits, go out and check out our Instagram at Money Guy Show. There's going to be stuff there, I assure you, that you can't see anywhere else. That's kind of what Reby has told me is going to happen. That's going to be the spot for the true fans.
And then the last thing, I know my fellow brethren. I'm talking to you guys. You get excited about tax season. You're just smart. You're maybe an engineer, you're an accountant, you're a business owner. You're like, man, I can't believe these guys are just giving it away. This truly is free information. These guys are kind of planting the seeds. The information that they've given me on an ongoing basis is cultivating and helping it grow. Now, I've got to figure out how I'm going to spend this money. It's time to harvest the fruit that we have created, that we have planted in the field from a decade ago, because we've been doing this show since 2006. You're realizing my crop is so big, I'm so successful, I need help to help kind of reap the benefits from all this. We want you to think about the Money Guy Show. Think about Abound Wealth. That's how we do this. We call this the abundance cycle. You come, learn, apply, grow. You reach so much success that you can't help but talk to us. That's what we're working on, guys. So I'm your host, Brian Preston. This is Mr. Bo Hansen. Thank you so much for tuning in to moneyguy.com. Go out to YouTube, go out to Instagram, go out to however you listen to podcasts. We'll talk to you soon. Money Guy team, out.